the citizens. Even today, the Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the day's trade, starting from the benchmark index moves to all the sectors that are in focus and the stocks that are buzzing the most in trade. We'll also help you understand which way are the markets going to be going further from here and where are the opportunities emerging for you as an equity investor as well. First, look at the levels of the Nifty and the Sensex. Remember, the markets have been slightly lackluster right from the opening levels today, and that's ahead of the US Fed meeting, and that is likely to come out with the policy announcement as far as the rates are concerned tonight. So the markets are slightly sluggish or cautious ahead of that. You can see a flattish move on both the benchmarks with the slight tilt on the positive side for the Nifty, 18,730, 14 points up right now. The Sensex is just marginally in the red, just 2 points lower in trade at 63,140. Remember, this comes after a very, very strong move in the markets that we saw yesterday. The broader market still holding up into the green, with the mid caps about 1/10% higher after touching those record levels. Small caps also hovering at 10,644, up by 0.3 odd percent higher in trade. Now, when we look at the advanced decline ratio, that's actually tilted towards the declines today. The sectors also, mostly all the sectors are actually just about mild negative, barring the auto stocks that are slightly positive, FMCG and metals that are trading higher. Rest of the sectors, in fact, are actually trading with some cuts coming in, with especially the IT stocks that are dragging the most, about 0.5% lower in trade, followed by the financial services and the Nifty Bank that's also seeing some cuts today. In terms of the Nifty gainers and the losers, you do have the Tata Group stocks that are in focus today, like Tata Consumer Products is up in trade about 2.5% odd. Titan is also moving higher by 2% odd as well. You're also seeing some other consumption names like, ITC Asian Paints also higher in trade. Cipla from the pharma pack is doing well. On the flip side, you do have Adani Group stocks that are slightly sluggish. Adani Enterprises lower by 0.7% odd. Kotak Mahindra Bank, SPI from the banking space is slightly down in trade. From the IT pack, it's again HCL Technologies that is dragging the index. Again, Adani Ports is also coming up as a lower stock on the Nifty pack, about 0.5% of decline for that one as well. But time to welcome our guest on the show. Shailendra Bhatnagar joins in. Market expert is here with us. Shail, good morning to you and thank you so much for taking the time out for this discussion. Well, first up, the markets had a very, very strong day yesterday. We were thinking that perhaps today might be the day when we may see the Nifty really claim those record levels again. But of course, we did see US markets giving us that support. The futures are slightly cautious again as far as the expectations from the US Fed is concerned. But yesterday, the important data that came out from US was the CPI inflation that came in at a 2-year low of 4% odd. And now all eyes are on the Fed as to whether the Fed will skip raising the rates this time around. What are your thoughts? And how do you think the Indian markets are likely to take the course now?
So, Sakshi, hello, and thank you for having me over. Yes, the US Federal Reserve is the growth engine of the world, and we just might be lucky to see a pause in the Fed rate hike that has been happening over the last 2 years, simply because the inflation, which was supposed to be at 4.1%, came at 4%, and that's a very strong fillip that you saw the US markets taking in yesterday evening straight on Wall Street. Well, unfortunately, it hasn't reflected on Indian stocks today. And while I was personally hoping to see a record high today, but that hasn't happened. It's, I assure you, only a matter of time when you see Nifty running with the Nifty Auto Index, FMCG Index, and so on and so forth. We are just about 150 points below the all-time high, and it will eventually happen. Today, what's happening is sectoral rotation into quality stocks, and especially the Tata Group shares are in focus. We've seen a fantastic earnings report from Trent that's running 2 in succession. We've seen very strong earnings coming in Tata Communications, therefore a record high. And Tata Motors specifically Tata Motors DVR, as also Tata Power and Tata Consumer are
Hmm.
in good shape. Specifically,
Yeah.
Tata Consumer, the brand that controls Starbucks.
Oh, yes, absolutely. Reminding us of our midday break from the coffee shop nearby our place as well. So we'll just get that going after this show. But definitely the Tata Group stocks are in limelight right now. And we've been seeing the kind of bullish reports coming in on Tata Motors, especially with the kind of turnaround we've seen in the Jaguar Land Rover space as well. From the power pack, most of the brokerage houses are now turning bullish and initiating coverage on Tata Power as well. So that's another stock that's coming up as a new buy from this space. Do you think these two stocks will lead the rally and outperform now from the Tata basket?
Sakshi, just step out of Mediaplex and check the temperature on the road. It's
Yeah.
42 degrees. Right? So peak power demand is going to come back in North India. We've had a wonderful April and May, but June in its complete manifestation is seen on soaring temperatures. That is why you see power producers shooting through the roof, because power demand is going to rise substantially in this week, and it is also sort of hitting all the right nodes. So therefore, Tata Power,
Yeah.
uh, and that also includes NTPC, that also includes CESC, JSW Energy, all power stocks which are producers will now see a good traction coming into the market, simply because peak power demand is going to come into the picture fairly soon.
Yeah.
Coming to Tata Consumer, this is, of course, the company that holds the Starbucks brand. We've seen very good earnings coming from Tata Consumer, and therefore you see a 5% spurt. The stock is now at multi-month highs, and I'm fairly confident you'll see a record high coming in very soon.
Yeah.
Uh, a low debt company, where quarterly sales over the last 4 quarters, quarter on quarter, has improved dramatically. So there is a sequential growth in number and revenue and business. The return on asset, return on capital employed, as also the book value has been improving for Tata Consumer, and that's the reason why you see this very sharp rally. Actually, Tata Consumer is playing catch up with its larger rivals, Hindustan Unilever, Nestle, and ITC. You have seen record highs in some of them, 52-week highs in some of them, and that's the catch up that's coming right in front of you. It's ticked 860. I believe the all-time high is 874, 880. You'll see that happening fairly soon. At least
Okay.
that is what the technical charts seem to suggest on Tata Consumer.
Okay, understood that. So Tata Consumer perhaps on its way to touch those all-time high levels as well, and a lot of factors supporting the move that we've been seeing even today. There's a very, very sharp move on this stock, about 4.5% uptick even now at the day's high level, despite this overall muted trend in the markets that you're seeing in today's trade. But another space that I have spoken to you before on the show, and where you have been bullish as well on a contra levels, is the IT space. But why this sector is again in focus today is because the JP Morgan report has actually come out signaling some worries for the sector in the current Q1 quarter as well. Now, JP Morgan has downgraded a few stocks right there, especially Persistent Systems. It has downgraded to underweight from a neutral earlier, cut its target price to about 4,100. We've seen the stock as the top loser from the mid-cap IT space today. A lot of other stocks also, the brokerage has maintained an underweight, like on an Infosys, on TCS as well. It has an underweight with a target price of 2,700. On Emphasis, they have set the target price at 1,550. They do believe that that there are worries as far as the entire services firm is likely to post in terms of the earnings when we talk about in Q1, and JP Morgan believes there could be a disappointment over there. Your own thoughts on the concerns raised by JP Morgan?
Well, Sakshi, let's look at it in the short term and in the longer term. And let's begin with Persistent, the one that you mentioned has been downgraded. Well, you see, Persistent is at 4922 today, down about 120 rupees. It's down about 2%. That's today. But on a 1 year basis, the stock is up 47%, right? So there is nothing to worry. You've had a very sharp rally, and what JP Morgan is basically trying to say that all the good things are priced in. They are baked into the price. So you should not be over enthusiastic, and your expectations should be grounded in reality, because there are disappointments on the way in terms of expectations. So it's better to, you see, profit is what is in your bank, not in the stock price.
Okay.
So
That,
unless you book profit, uh, there is no, you see, profit has to be in your bank, not notional.
that's
So
true.
this is a basic round of profit booking that's happening in mid cap IT. We've
Okay.
seen persistent, like I said, going up by 46%. If you see KPIT, which is also at a record high 2 3 days ago, uh,
Yeah.
that's, will you believe it, 120% in 1 year.
Yes.
So the price that you see 1040, it was 520 1 year ago, same time.
Yes.
So these are profit booking tools which are deployed to sort of make one set of investors exit with good profit, make them happy,
Yeah.
and allow the dip in the price to extend a bit so that a new set of investors can get into the bandwagon and rally higher.
Right.
So
Right.
uh, I would I would I would say that mid cap IT valuations are again in unreasonable territory.
Okay.
One, and it's good that profit is being booked, which means that existing investors are exiting happily, and a new set of investors will be coming in at a reduced price from the all-time high that we have seen earlier. These are all
Okay.
churnings that are happening. This money that is moving out is going into Tata stocks. It's going into cement stocks. It's going into paint companies. It's going into mid caps. So one should not be worried at all. This is the way that the market works, and
Okay.
this is how it is. When you see the monsoon being light and scanty, it means cement companies will do well.
Yeah.
Therefore, you have Dalmia Cement, you have Ultratech Cement, you have Ambuja ACC
Okay.
doing pretty well in the markets.
Okay.
When the rains are not good enough, fertilizer stocks do well. Therefore, you see fact moving up. You see other fertilizer stocks doing well. So this is just churn of money that happens from one overheated sector to one
Right.
sector where there is relative under ownership. So that's the
Right.
game of the market, and that's how it is done.
So, how would you advise investors to really look at these dips? Should one really go ahead, lap up some of the mid caps, or should one go for the heavyweight counters, the big wigs, TCS, Infosys, HCL Tech at this point in time? What is the best way to approach the sector?
So, Sakshi, when you look at long-term valuations,
Yeah.
Infosys and TCS are the ones that are trading below their average valuations over the last 3 5 years, and
Okay.
perhaps, just perhaps, they provide an opportunity for long term shareholders to look at them with a appreciative eye. And it's a financial advisor who will give you a buy or a sell signal.
Sure.
My limited area of expertise is to point you in the right direction where you can make money in the longer term. So that's
That's right.
how I look at IT. And in case people are interested in participating in this fantastic, super duper rally that is happening in Indian markets, the best way is to buy quality mutual funds.
Buy quality names. That's the best way to participate in the India growth story and in the Indian equity markets journey from here on as
Actually, I
well.
said quality mutual funds. I'm sorry to
Quality
interrupt.
mutual funds. I thought that you said quality stocks. All right, quality mutual funds. We will come to it for sure towards the end of the show and help our viewers really understand in case one really wants to start off with their journey in equity investment with mutual funds. Then what is the best way to choose? Which we always ask Shell, and he has some very, very wise points with which at least young millennial investors who watch us on our shows, how can they really approach their equity investments in case you are starting off with your first paycheck, then how do you really approach this space? We'll definitely come to that as well, Shell. But, apart from the IT space, where else can one really look at in this current market setup? Where do you really see, markets performing or taking the lead as far as the sectors or themes are concerned?
Sakshi, I would imagine the metals sector and the metals index are providing short-term technical opportunities on the long side for two
Okay.
reasons.
Okay.
Uh, if the Fed pauses in its rate hike, a
Mm-hmm.
pause in interest rate hikes is very, very good news for the metals sector, and you
Mm-hmm.
see it as the top performer today.
Yeah.
Secondly, China has given another stimulus to its economy, and it's the world's largest consumer of metal. Therefore, you see a very, very strong rally happening in the likes of stocks that you're being shown on screen, which is Tata Steel, which is Vedant. You've seen a very nice jump up in JSW Steel. So these
Mm-hmm.
stocks are making hay while the sun is about to shine. And that's
Yes.
the place where traders on the long side are concentrating their energies and cerebral strength on
Okay.
metals. Uh,
Okay.
once you see U.S. Federal Reserve saying that there is a pause, you'll see a very sharp rally
Mm-hmm.
taking place. And if you still see the Federal Reserve rising rates, then
Yeah.
this incipient rally that you see today
Uh-huh.
will automatically disappear.
Okay, understood. So both scenarios right there for all the investors to really take note of in case you're approaching amid this space where we are still speculating as to what the US Fed might do tonight. Apart from these two spaces, of course, IT and metals we've discussed where there is momentum. Let me also focus on a few stocks that are actually in focus today. Of course, one of the stocks is definitely an interesting stock for a lot of investors who actually go for small ticket stocks. Vodafone idea is what I'm talking about. Of course, there are a whole host of investors, Shell, that have their investments in the stock for a long time and their money is stuck right here. We're suddenly seeing this momentum coming in because there is news flow that there might be some equity infusion coming in. So that's really getting the stock up for grabs as well. What is the best way to look at Vodafone? Should one really look at this stock at this point in time, or is it better to actually let things get clarified before investors really take a plunge?
So, Sakshi, I don't think so that in the quality metric that I follow in terms of rising ROCE, fantastic return on assets, good operating margins, a consistent profit making track record. I don't think so. Vodafone Idea falls into that bracket,
Mm-hmm.
and it's been a long-term disappointment for a lot of shareholders.
Yeah.
So it's best not to say uh, anything or offer advice on
Sure.
Vodafone Idea.
Sure. All
Doesn't
right.
agree to a lot of my parameters, and therefore I don't prefer.
Sure, sure. We've actually seen a whole host of movement in the telecom space as a whole. Apart from Vodafone, we're also seeing Bharti Airtel looking at momentum. We're also discussing Tata Communications that's been touching, all-time high levels as well. So keep this in your radar in case you are a telecom space enthusiast as well, and keep looking at how the trends are building up over here. Another stock that I'm sure that you definitely keep an eye out on is CDSL. Of course, we talk about Indian markets and the way Indian growth story is shaping up, the number of demat accounts that open year on year. We've seen an influx of new investors coming in. And one of the best ways to perhaps look at the Indian stock markets is the way these depository stocks are also moving and how they have shaped up over the last few years as well. CDSL today is down in trade because there's been an offloading via a block deal today. There's likelihood that BSE has sold off, although we don't have any confirmation on that yet, but that's the likelihood that we can assume at this point in time. 1013 levels for CDSL today. How should one really look at these kind of stocks which really play the stock market story?
Sakshi, there are 2 points to it. One, I'll touch upon promoter sales a little while later. But there has been a 5% sell-off, a 5% equity sale by Bombay Stock Exchange, which is one of the promoters of CDSL, and they've raised 478 crore rupees via that stake sale. Uh, that's primarily because they want to keep a war chest ready when it comes to competing with National Stock Exchange on the futures and options market. So one is that uh, I would presume that the very sharp rally that you've seen between 2020 March to middle of 2022 on CDSL more or less encapsulates what you're looking at, the fantastic demat account openings that we've seen in India during and after the pandemic. So I would presume that the stock more or less is adequately, if not richly, overvalued.
Okay.
It was, 220 rupees, 180 rupees at the start of the pandemic, and it went all the way higher to 1400. So it's done a 7x journey, and it's now resting and enjoying. And if the promoter feels that it's time to take some money away, that
Okay.
itself is probably an indication that things are richly valued, and it's time to take some money, make some money out of it. And in the same way, I would like to say this sharp rally that you are seeing in the markets has seen a lot of promoters offloading equity to retail investors, institutional funds, and high net worth individuals. So that is also a sign that the market rally has matured,
Okay.
and one needs to be very, very cautious in taking long positions at these record high levels. If you are invested, do not exit, but you must be doubly, triply, and four times cautious in entering the markets at levels where you see promoters offloading stakes, because nobody
Okay.
knows more about the company than the promoter. You
Okay.
and I and analysts and fund managers are secondary people, not directly related to the business. If promoters are selling, they are giving you a very, very big, uh, you say, an indication that markets may have peaked in the short term.
Near term. Okay, understood. So that's an important takeaway for all the short-term traders right there. That's what you need to take away from this conversation. But Shell, another space that you were talking about, that, mid caps and small caps, that's where I wanted to take your view. Now, both these indices have in fact surged about 20% in the last 2 to 3 months odd. We've
Yes.
seen a lot of factors supporting this momentum. The macroeconomic conditions have, improved. We've seen second time in a row the RBI continuing a pause on rates. We've seen the inflows from foreign investors that built up as well, and they've lapped up the mid-cap space as well. What do you believe is in front of us as far as the mid-cap and the small-cap space is concerned? Is a bull market for these indices and sectors also underway?
Sakshi, if you are at a record high, obviously the bull market is in place, right? And a fresh bull market happens when the previous bull market high has been taken up, which will happen in the mid cap and the small cap index shortly. So they will also follow the likes of Nifty Auto Index and the Nifty FMCG Index. So again, like I said, it's very difficult to cherry pick when the market is at a record high, although we know good things are coming. So one can be practical, and one can be brash, and one can be stupid. So let's look at all alternatives. You can buy blindly and pray that things will work in your favor. They never do. Everybody's money is precious, and it should be utilized in the best manner possible. If you are if you are thinking of getting into mid caps and small caps at a level when the index is about to hit a record high, I don't think so. That is a good thing to do.
Yeah.
A sensible way out would be to allocate some percentage to mid caps and large caps. In classical asset allocation theory, mid caps and small caps can be 25% of your overall portfolio.
Okay. Okay.
60% of that portfolio has to be in blue chips.
Okay.
Now, at a record high, the best you can do is choose two very good funds, one in the small cap space, one in the mid cap space. They will also be at record highs, right?
Right. Right.
And put in a simple SI. Do
Right.
not do not invest at one go. Break your money into small parts, whatever you wish to invest. and you invest over a period of 3-5 months. So if there is a correction that is going to happen, it will come and you will buy the same good asset at a lower price. At this moment, you see there are many stocks in mid caps and small caps that are at record highs. You cannot be cherry picking. If you
Right.
do, it's fraught with danger. I don't deal with danger. I deal with common sense and intelligence. That says in this sector, which is very volatile and very risky with high beta,
Yeah.
where stock returns on both sides, plus or minus, are phenomenally uh, huge. So it's best to be sensible. Choose two, one mid cap fund and one small cap fund. And overall, it should be about 25% of your portfolio and do
Okay.
a SIP. Once you do that, you will be the happiest.
Okay, so how do we choose that? I remember, like, last time we had this conversation, you did say that perhaps a 3 or a 4 mutual fund pack in your portfolio can actually do you good. You can start off with a blue chip, go on to a hybrid, and then a mid cap, and then an international fund. Today, you're talking about mid and small caps, and a very small portion of your portfolio in case you are very risk taking and you want to add that diversification to your already built portfolio. Perhaps I'm guessing like you already have a blue chip in place. How does one select that mid cap?
Well, if you had told me earlier, I would have come up with a couple of good names on the mid cap portfolio, fund portfolio side. Maybe on Monday we can do that.
Sure, absolutely.
But the fact remains that mid caps can be about 15% of your overall portfolio. Suppose you have 5 lakh worth of portfolio. So 60% of 5 lakhs is blue chips, that's 3 lakhs. 15% of 5 lakhs is about 75,000. So that should be in a mid cap fund, and 10% is 50,000. That should be in a small cap fund. Obviously, these are SIPs that will run, and that's how sensibly you invest into the market. The rest can be tax saving, and the rest can be one international fund. So that we can discuss on Monday or
Sure.
Tuesday. I
Sure.
have a few names ready, but they somehow won't be
Sure.
at the right place
Actually, we
unless you
will.
show good ground.
For sure, fair point right there. But definitely, we've given that indication to all our viewers that in case you want to participate in this mid cap and small cap rally, the best way perhaps is for you to be exploring a mid cap and a small cap fund. Start with an SIP, and don't go all out right there and chase the momentum, but invest in a staggered fashion, and that can definitely add on to your portfolio at this point in time. So thanks a lot, Shail, for giving us that holistic insight into what to expect from the markets. How will the US Fed, move on rates really impact the market momentum going forward from here? We also discussed the IT space, the concerns are being raised by, a brokerage house. How do you really look at the current stocks? Where are they at from their lows right now? In case a profit booking is happening, whether there is opportunity for you to invest right here. Two other spaces that you did talk about where momentum is building up, including metals as well, and the mid caps and the small caps that we discussed, and several other stocks that you gave an insight. Thank you very much for sharing that holistic insight with all our viewers. Always a pleasure having you with us on Business Today TV, Shail. Thanks a lot. And with that, let's quickly move on to understanding how the markets are shaping up right now. So actually, they're building up slight momentum, I could say. The 18,737 coming in on the Nifty pack, about 22 odd points of a gain on the upside. The Sensex up by 28 points as well. 63,171 coming in as far as the Sensex is concerned. All eyes on how the global markets will be approaching as far as the US Fed momentum is concerned. Will we actually see a day of cautious trade continuing towards the last point of the day, or will we see momentum building up from here? We'll continue to track all that for you. So do stay tuned with us on Business Today TV to understand all that about the markets and more. Many thanks.
Small investors keep their focus on blue chips and the movement of the index. Veterans say the broader markets are giving better returns. India Today Group's global business editor Udayan Mukherjee spoke with Anand Shah, head of PMS and AIF investments at ICICI Pru, to find out which sectors are clicking and where investors can expect best profits.
Hello and welcome to this Markets Today.